everyone. I have had a couple people text me this morning worried about the price of Bitcoin. So I figured I'd take a quick early lunch and give my thoughts on the price of Bitcoin, including some sort of long-term historical perspective. So Bitcoin's price is doing exactly what every valuable high-growth asset in the entirety of human history does, which is it goes large run-ups in the price over a relatively short time, and then a period of time where there's a drawdown or the price sort of grinds lower. And then it goes on another big bull run, which means up. Bull means up, bear means down. It goes on another big bull run, and then, it grinds sideways or goes down for a little while. And that is 100% normal of every high growth asset, whether it's Tesla, Amazon, Facebook, anything, any Google, etc. Any of what's, known as the Magnificent Seven, stocks, or any high growth stock in human history all behaves the same way. So I've talked a little bit about this before, but I figured I'd do a longer version of sort of why is that? Well, for a couple reasons, 4 reasons. So in any market, you have different groups of people. So one group of people are what I'll call, we'll call them traders. Okay, so traders are people who are buying and selling an asset, trying to benefit by buying it low, selling it high. And a lot of those traders are momentum traders, which means they try to find things that are going up and then buy them, and then when they start going down, they sell them, which of course makes the highs higher and the lows lower. But so we got traders. Category 1, traders. Category 2, tourists who bought the asset because it was going up. They're not sure what it is, but they are not trading like traders, but they also are the people most inclined to sell something when it starts going down because they just don't have the conviction. They don't have the conviction of what it is they own. Third group of people is true believers, and those are people that, they believe in the asset, and it is an asset they want to own, they know why they have it, and all of that. So in any market, when something starts going up, it really doesn't matter what it is. When anything starts going up, tourists and traders pile in, and of course there is some baseline of true believers that either have been there all along or is, slowly growing. And when the momentum turns on any asset, which eventually always happens, there's no way anything ever just keeps going up forever. So eventually when the momentum turns and something starts going down, the traders, especially momentum traders, bail out because, of course, their goal was to get in on something on its way up and then get out before it goes all the way down. And so by definition, they start bailing, which pushes the price even lower. And the tourists who have low conviction and are not sure why they bought what they bought, they start getting off the train as well. And then the true believers typically are accumulating that whole time. So what happens with any high growth asset is you have a mix of all of these people, and the interplay is happening all the time. So in the, Bitcoin is up more than 40, even right now it's up more than 40% this year. And probably, a month or two back, it was up, 60, 70% this year. So anytime something grows that fast, there's going to be, tourists and traders, all of which has some element of speculation in it. They pile in, and then at some point they run out of gas, and there's a market, there's a price correction temporarily, and then it starts marching back up, and you just don't know how long that price correction is before it starts marching back up. And of course, you're probably thinking, well, then why would everybody not just wait for price corrections to buy? And the answer is because you don't know when they are or how deep they are. So you don't know if the price correction is dropping from 73,000 down to 68, or 64,000 or 57,000. There's absolutely no way of knowing. And even on the big bull runs of, like earlier this year and all of 2023, there were numerous pullbacks of 10%, 20%, 30% along the way. So any one of those you could have looked at and said, well, hey, this is the big drawdown. And then it's like, you just don't know. There's just absolutely no way of predicting that. So what we are in, what I'll call a little dip right now. If what we are in right now with prices at, let me check my watch, prices at 57,000. If this feels like a massive, mega, life-changing dip, it is because you have not been in Bitcoin very long. So this is somewhere between a mild to a moderate dip. If the price were down more than 50% or 60%, I would say, okay, that's a big dip. This is not a big dip. This is a, mild to moderate dip, at most. And, in a mild to moderate dip, the momentum has changed as of, a month ago. The momentum changed. The price started going sideways. The some of the tourists started getting bored, losing interest, or lacking patience. The traders started getting concerned that the price was going to go down instead of up, so they started dumping their positions. And the true believers, of course, are always buying, but there's not always enough true believers to keep up with the selling pressure. And so you go through a period of time where the price comes back down, and then eventually everybody sort of comes to their senses and realizes, hey, this asset actually does have a lot of underlying value. The ability to transmit value anywhere in the world, just like the internet, where you can transmit information anywhere in the world, the ability to transmit value anywhere in the world in a way that nobody can stop is just super powerful. And the future monetary system of the world, I believe, will be Bitcoin. Nothing has, I think, has changed that. And so, when people realize that and they sort of come to their senses and they're like, hey, nothing actually changed, well, then people start buying Bitcoin again, and then eventually we see an all-time high. One thing that always happens with the psychology is if you bought Bitcoin before the Bitcoin ETFs, you'll remember it ran up to about 49,000 a coin, and then it dropped to about 38,500 a coin, which I believe is a bigger percentage drop than the one we're in now. I'm not sure. I haven't run the math, but it's something like that. So if you've lived through that, when you're in the middle of it, it feels like a huge dip. And then as soon as it passes, everybody's all euphoric and everybody completely forgets what it felt like to be in a dip. So that's where we are. And the reason I'm not worried is, I've been in dozens of dips that felt like this, and I just know exactly what they feel like. And Bitcoin is so powerful and so versatile and such an amazing technology that it always recovers. And so if it's in a dip, who cares? It's a buying opportunity. And typically, what true believers do in a dip is, if possible, you come up with some cash you didn't have before. Now, a lot of true believers like me are so committed that they have such a high percentage of their liquid assets in Bitcoin that there's really not any more assets to come up with, because every asset that could possibly be came up with is already in Bitcoin. But there's always people that are not, completely all in already that are using this as a buying opportunity. So right now, while some people are selling, other people are buying and using it as an opportunity to stack more Bitcoin. And those people, back when Bitcoin is on a big bull run again, which is, almost certain in the coming weeks or months, those people will be super glad that they bought in the 60,000s or even the 50,000s. And that just always happens, and it happens over and over and over, and it happens all the time. So two other examples I wanted to give you of why markets go up and down on a short-term basis is that in every market, there are buyers and sellers all the time. So let's assume, as a thought experiment, that I was the only person in the Bitcoin market, that the Bitcoin market was holding absolutely steady at $60,000 per coin, and that I was the only one impacting the prices. Well, what you would see, because I use the Coinbase debit card, is what you would see for 2 weeks in a row, slow selling pressure. Every time I buy Chick-fil-A, every time I pay for a restaurant, every time I go to the grocery store, every time any of those things happen, with the Coinbase debit cards, it sells just enough Bitcoin to cover the purchase price. So you would see for 2 weeks, you would see the price slowly sort of slipping, grinding down, and everybody wondering what's going on. And the answer is, I'm just living my life. And then every 2 weeks, when my, income streams hit and it auto buys Bitcoin on direct deposit in Coinbase, you would see a big spike in the price of Bitcoin. And so everybody would be trying to figure out what's going on. Is it macro events? Is it international wars? Is it the stock market? Is it, what could possibly be causing the price of Bitcoin to go through this pattern where it grinds sideways and down for 2 weeks, and then it spikes up, and then it grinds sideways and down for 2 weeks, and then it spikes up, and it just does it over and over and over. And the answer is, if I was the only person in the market, what's happening is I'm spending money with a Coinbase debit card, just living my life, and then every 2 weeks I get, a direct deposit that auto converts into Bitcoin, creating one-time spike in buying pressure, and then the rest of the time it's selling pressure. So the actual Bitcoin market is basically a bunch of people like me, hundreds of millions of them all over the world, that are constantly buying and selling based on their needs. Another factor to factor in is, for example, one of my kids is going to turn 16 next year. Well, next year, that means my family will need one vehicle we don't have right now. And the only place to get capital to buy that vehicle when it comes next year, for me, is going to be to sell some Bitcoin for US dollars to buy that vehicle, assuming they won't let me buy it with a Coinbase debit card. Now, when I make that decision, it will have nothing to do with Bitcoin. It will have nothing to do with macro factors, international wars. It will have nothing to do with anything other than the fact that one of my kids turned 16. But again, if I was the only person in the market and my buying and selling behavior was the only buying and selling behavior that was happening, then when I buy a car for one of my kids, even if it's a used car, you're going to see a huge drop in the price of Bitcoin, because if I'm the only person in the market, suddenly a bunch of Bitcoin got dumped on the market. And again, a bunch being, as compared to a 2-week, direct deposit or a Coinbase debit card, it's, buying a car is comparatively a lot. And everybody would be wondering, oh no, what happened to Bitcoin? The answer is nothing. One of my kids turning 16 had absolutely nothing to do with Bitcoin. It had to do with, capital needs. So again, you can see where the price of something would go up and down based, if I was the only person in the market. Now imagine there's hundreds of people in the market. Every one of them is making decisions based on when they buy cars, when they buy houses, how much capital to allocate to Bitcoin, how much not. Everybody's getting paid at different times. Everybody's spending at different times. Everybody's having, rich family members die and suddenly, rich uncles, and suddenly they have a huge infusion of cash and they buy Bitcoin. And other times they have to settle massive expenses, or, cover the cost of, some unforeseen something in their lives that results in a major expense. All of that is happening at the same time, which results in a massive interplay of hundreds of millions of people making decisions with, on top of that, all of the traders and tourists that are sort of here checking out Bitcoin that, freak out easy and sell easy. And then, of course, they buy on the way up and then they sell on the way down. And again, it's a bad way to, make money, but it's the behavior of a lot of humans just naturally. So, if you're wondering, is anything wrong with Bitcoin? No. I'll say it a million times. There's nothing wrong with Bitcoin. The technology of Bitcoin is just as amazing as it's always been for 15 years. Second, is this dip any different than anything we've ever seen a million times before? No. This dip is exactly like every other dip that's happened over the last 15 years, and that has happened with every other high growth asset that's ever existed. They all have dips like this. It looks the same. It feels the same. It's all for the same reasons. And it's totally normal. Is it a great buying opportunity to buy Bitcoin? Yes, it absolutely is. I totally understand that it's not fun buying things when they're on sale, at least not assets. Nobody seems to want to buy any asset when it's on sale. People love to buy products when they're on sale because they feel like they're getting a good deal. But assets, meaning stocks, bonds, Bitcoin, commodities, whatever, everybody feels like if they're buying it when it's on sale, then maybe they're buying at the end of the party. Maybe the party's over. Maybe somebody just took the punch bowl away. Maybe, this is the end of the asset and they're just getting in at the wrong time. So if you believe in an asset, and if an asset is, has incredible value, then it's really as simple as you should buy it, more of it when it's on sale. You should never not be buying it. But if the price goes down, then however much capital you were comfortable allocating to that asset when the price was higher, perhaps you're comfortable allocating even more money to it when the price is lower. After all, you can buy more of it for the same dollars. And if you've already bought as much Bitcoin as you can, don't worry about it. Again, when the price is, 500,000 a coin, absolutely nobody's going to care if you bought it for 74,000, 64,000, 57,000. None of that's going to matter. And again, take it from somebody who's been doing this since 2017, that every time I've ever bought Bitcoin, at some point it was lower than the price I paid for it. Because if that was not the case, it means I would have perfectly timed the bottom of the market every time, which is impossible. Okay. And so every time I've ever bought Bitcoin, there's been some point in the future where I've thought, wow, if I had waited, I could have bought more. Except that nobody on the planet knows how to time that. It's completely impossible. And if it helps you feel any better, Michael Saylor, the CEO and founder of MicroStrategy, which is the largest company the largest holder of Bitcoin in the corporate treasuries, they have 214,000 Bitcoin, which is more than 1% of the entire supply of Bitcoin that ever exists, is in the treasury of MicroStrategy, a publicly traded company. And they just bought a bunch of Bitcoin over the last month for an average price of about $65,000 a coin. Now, you're probably thinking, wait, if Michael Saylor is a genius, he is, and everybody in the entire Bitcoin world follows him, and he has access to the best information about Bitcoin, then why did he spend hundreds of millions of dollars buying Bitcoin for $65,000 a coin when right now he could buy it for $57,000 per coin? And the answer is because he is smart enough to know that he has no idea what the price of Bitcoin is going to be in the future, and neither does anybody else. So when the company has capital availability, they buy Bitcoin regardless of the price. And that just so happened over the last month to be around at various prices that added up to about $65,000 a coin. And so every purchase of Bitcoin that MicroStrategy has ever made, someone could look back at a chart and say, ooh, you could have timed it right here and you could have bought more Bitcoin for less dollars. And the answer is that is true for 100% of assets on the planet all the time. That if you could time it, everybody'd be rich. And the answer is you can't. And so what do smart people do? Smart people decide what assets they want to own, and then they buy those assets. And then they hold on to those assets as long as conceivably possible. And smart people are not trading those assets, again, unless you're on Wall Street and you're an expert, trader, which frankly, nobody I know in Mississippi, has ever consistently made money trading anything. So, not me, almost certainly not you. Don't trade Bitcoin or anything else. So, the traders and the tourists and all that sort of people will make things go up and down, but all of the smart people are just buying, they are accumulating, and they're just waiting. They're waiting for the price to go up, and they are patient. And historically, over the last 4 halving cycles, the price has always been radically higher within 6 or 9 months. Often it doesn't take that long, but at a minimum, it's always been higher in the 6 to 9 months following the halving. So here's a little dip right after the halving. In the grand scheme, who cares? Is it predictable in advance? No, nobody knows. Is Bitcoin still the best possible investment? Yes, it is. Is now a great time to buy? Yes. Is anything wrong with Bitcoin? No. And, that's an update. So I'll do an update right after this, talking more about the historical perspective. I've done a video similar in the past, but I'll do one right now just because it's timely, talking about the sort of long-term perspective of Bitcoin and how the price has changed over time and all of that. So I'll do that right on the heels of this video, but for now I'll stop this one here.